Good morning, everyone. I'm Vince Lansing. This is the Gold Fix Market Rundown. Very big, significant day yesterday for price action in gold, and very unsettling morning that I've had so far. That chart you're looking at there, it's not rendering as big as you probably need it to be, but that's a phone screenshot I took this morning. I kind of woke up this morning at 5, and I looked at that. It came up just like scrunched up like that. And I just said, this is not normal. And what I immediately said was, it's not normal because um, we're going to we we seem to not be having any problems on tariffs right now. It's not a repatriation thing of gold. It's not a liberation day of gold. It's not an escalation of war in gold. I know it's all that matters is technicals at this point. It's like it broke out. That's it. They're buying it. But it's not just hot money buying it. It's big, big money buying it. And I did a mini pod this morning and I sent it out to everyone. But I want to touch on some of the concepts as well as go through um, why yesterday was significant. And yesterday was significant because gold finally eclipsed its 1980 high. Uh, but there's nothing going on like in 1980. We don't have 1980 inflation. I don't. Okay, so we'll come to it in a second. Let's do the markets and let me pop something up here. 10-year yields are up 2.5. The dollar is up 4. It was weaker yesterday. S&P 500 is 6506. There's a lot of rotation going on internally there. The VIX is 1520. Gold is 3651 and change, up 16. Closer to the middle of the range. Silver is near the lows of the range, 4118, down 15. Copper is 474, down a penny. WTI up again, 46. Notable. Natural gas is up 3. Bitcoin is now firmly on a slow, orderly upswing. We'll see. Ethereum up 52. Platinum, palladium mixed. Gold, silver climbing again, getting close to 90 again. I don't like gold, silver climbing with the Fed cutting. I don't like that. That's not I'm not bearish by any means, but I'm just saying, it's something to think about. And grains are all down. Okay, so I sent this out this morning, and I'm not going to go through the whole thing because it was really well, we'll see what it is. But let's bring up a couple charts and talk about the markets yesterday. Let's do that. Um, Here we go. All right, so that's what you saw. That's what I saw this morning. And then I proceeded to look for relative values. And I'll leave that up while I'm reading a little bit here. All right, so gold and bonds delivered different notes yesterday. So gold surged about 3,600, uh, set a new all-time high, and set a new all-time inflation-adjusted high, which I'll show you a chart of that in a minute. And long-term treasury yields fell sharply. So those of you, when I talk about bond vigilantes, yields dropping means that the bond vigilantes are okay with us cutting rates, which is, okay, I can understand that. They could change their mind, but that's where they are right now. Um, but stocks were really kind of nowhere. And if the Fed's going to ease and bonds rally, usually stocks rally too. And they're kind of not. And they're rotating back and forth value versus growth. Meanwhile, short-term interest rate futures are starting to discount a 50 basis point cut in September 17th, which is it's not a big discount yet. It's only like 15 or 20%, but it's moving that way now. So um, I guess what I'm saying is when you look at the three commodities, the three asset classes, stocks, bonds, and gold, stocks are saying it's at all-time highs, right? Stocks are saying we like it, but they don't really care that much about the cut, it seems. Bonds really are reacting positively to the cut. So if the bonds are reacting positively to the cut and the stocks aren't doing anything right now, we're talking about the short term, those two markets are telling you recession, right? Okay. But gold is screaming higher in an orderly scream. It's almost like it's I don't know, it's just going up in a very mysteriously orderly fashion. So I think that when you take these three things together over the last week or so, since it became apparent that Powell is going to cut, after the second jobs uh, uh, drop, uh, they're kind of telling different messages, or maybe it's the same message, but it's like we're okay with inflation, uh, and we're going to buy bonds. Like I don't understand why you're okay with inflation and yet bonds are strong. That's what that's what I can't figure out. And that's why this morning I said something's wrong here. It's nuanced, but the price actions tell me that. So you look at the highest monthly RSI going back on a monthly RSI going back since 1980. RSI, the way I measure it, which is normal way, has never been higher than it is today unless you go back to 1980. Looks like Tuesday, June of 1980. It's 88%. And that's above every other high that we've had, over 40 years, 45 years. That's pretty crazy. So, but the big event in terms of pricing yesterday was, and I'll put this chart up. I think this is a zero hedge rendering. It was shown on bar charts, but whatever. I think it's zero hedge. The big event in price terms yesterday was gold's breakthrough above its January 1980 inflation adjusted peak. Um, Climbing to new high. I mean, this is where the problem comes for me. Climbing to new all-time inflation adjusted highs with inflation on the downswing, right? And there's no war or anything going on nothing new that we don't know about, you know, confirms gold's dual role as a hedge against monetary instability. And it also confirms it against as a benchmark for weakening currencies. And so all these things that are going on in the market, they've been going on in the market, but gold is starting to care a lot more for some reason. So it's technical. Uh, but inflation is supposedly lower now. So I think gold is predicting again, meaning uh, until 1993, when Bill Clinton became president and he cut a deal with Greenspan, who cut a deal with Rubin to lease Fort Knox gold out, in my opinion, but there's plenty of evidence uh, out there, and other people smarter than me think that gold used to discount future events. And then in 1992, 93, that's when I started trading. Um, Gold came off, and that's when the Fed started leasing the gold, or the Treasury started leasing the gold to the bullion banks so they could sell it forward. And gold never worked again as a predictor or indicator of concerns. It just never worked again. Right after Clinton got elected, everyone was buying gold because Clinton got elected, and then it was over. But anyway, so that's like we're talking about from 94, to 2009. And now, especially since 2022, um, uh, gold is predicting again. What did gold predict? It predicted a couple wars. It predicted or it moved concurrently with the de-dollarization after 2022. It moved right after COVID, and it also moved after the 2008 crisis. So gold's a predictor again, and I can't figure out why they haven't put a lid on it yet. I mean, they have put a lid on it for 4 years. I mean, for 4 months going into this year, but now it seems to be like the lid is off again. So anyway, I think gold is predicting again. The dollar weakened to its lowest level since July. And that amplifies the Western-driven gold rally, the Western demand, right? You'll probably see, like, for example, if gold rallies more from here during US hours, silver will probably catch up a little bit. I'm not sure, but people are starting to sell silver and buy gold again. It's like a central bank behavior is going on again. Um, Historically, lower yields and a softer dollar have been consistent drivers of bullion strength. yada, yada, yada. In the US, though, right? And that pattern repeated yesterday. U.S. labor conditions are the focus right now. We're looking at recession. We're more worried about recession than inflation. Um, Policy expectations are shifting, meaning uh, fiscal has been sloppy and soft and is continuing to be sloppy and soft. Trump needs a bigger bubble to get through this. And now the Fed seems to be accommodating them. Um, so, I mean, there it is. I mean, gold finally took out its January 1980 inflation adjusted record high in US dollar terms. That's big. Maybe miners will go up next again. It's going to rotate now. Um, now that's the gold part of commodities. Now, oil prices also gain, closing higher despite OPEC saying they're going to produce more. OPEC plus, mind you, which means Russia, right? Um, Rallies faded yesterday, but the market's ability to finally hold higher levels on the day points to durable demand returning. So I think the gold market's discounting stagflation or inflation or recession. We don't know, right? And the oil market is starting to discount, starting to shrug off bearish news. The oil market's starting to discount a boom. I almost feel like we had in the 70s, almost like we should have an oil embargo the way things are going. Anyway, even Bitcoin, right, which is your risk on gold, rallied. So I'm just like a little bit unnerved at what's going on here. Markets seem to be entering a new phase where the monetary easing and fiscal slop kind of align or converge, and commodities are becoming more central. It's almost like just Hartnett is right, you know. Commodities are going to be bigger. Let me find another chart here. Right, that's the chart that I sent out with the post, and that's all the I'll do a quick thing of that, right? This is where macro discretionary got in. That's March. They got in before, but you could see I saw them getting in March, right? Of 24, right? And this is where they got out, the election. That's a nice run, right? And then they got in again, and then all the hot money got in for repatriation, not repatriation, Liberation Day. And then they got out. Nomura got bearish, gold went down. Hartnett goes from bullish gold to bullish oil right here. And then he goes back to bullish gold right here. And now we've just broken out and ramped up. I don't mind telling you, I don't get it. So I'm going to have some things coming out today. I'm going to elaborate on the report that I used for that conversation we had this morning and get a couple other things out to you guys. So have a great day. I'm Vince.